This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg Television, Bloomberg Radio, YouTube, and Bloomberg Originals. It is Bloomberg Businessweek Daily on this Wednesday, August 26, 2026. I'm Tim Stenivek. Carol Massar is out. We got Lisa Mateo here. She's news anchor for Bloomberg this weekend. It's so good to have you here.
Good to be here. It's
I know
not
it's like
Saturday.
almost your bedtime.
Yeah.
So thanks for staying up late for us.
I know.
Because you're like in here, at like 3 a.m. every day. So.
I know. And then you were off last week. I was away last week on vacation. Like, we're all resettling, getting back into the norm.
Well, the norm today is pretty big and pretty chaotic.
Yep.
We got a great program coming up over the next couple of hours. It is, of course, an Nvidia earnings day. We got stocks and bonds both falling. We're going to have more from Charlie Pellet in just a minute. In the meantime, a Bloomberg exclusive crossing just this morning about how Russia is preparing to escalate attacks on Ukraine. Separately, Iran's military saying it reached a revenue sharing agreement with Oman when it comes to the Strait of Hormuz. We're going to go around the world with Jenny Welch. Also being watched around the world, what is going on with Meta? They're paying up to $18 billion in a landmark settlement, or landmark settlements, I should say. We're going to get to details and ask one child safety expert if that's enough.
Yeah, and that's an interesting story in itself, just because of, I know I'm a mom of like teens and things like that. So it's a very, very important story that I'm glad we're digging into that today.
Yeah, the big question I have is like, is this the end of the settlements and like what this actually looks like in these apps? I mean, I have younger kids and we're trying to keep them away from this stuff for as long as possible.
Hard.
It is hard.
Yeah.
It is hard. While we await Nvidia results, we're going to be checking in with the CEO of another manufacturing company in the semiconductor making process. The CEO of Lam Research is going to be joining us in just a few minutes. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, thank you very much, Tim and Lisa. We have got the Dow, the S&P, NASDAQ. They're all in the red right now. Little change, perhaps, is the key takeaway at this hour. Yeah, we're in a holding pattern roughly 2 hours from now when the Nvidia news breaks. Complete coverage on Bloomberg Television and Radio. Right now, we do have Nvidia shares ahead of earnings. Trading lower, Nvidia down by 1.2% as a baseline, keeping it all in context. S&P 500 index just about flat on the day, lower by 3 points now, down under 0.1%. Dow Industrials down 122 on the Dow, drop there of 0.2%. NASDAQ down 0.2%. NASDAQ 100 index swinging between gains and losses. Right now, I'm going to call that unchanged on the day. The stocks, the Philadelphia Stock Exchange Semiconductor Index, also flat on the day with a 2-year 4.22%. We've got the 10-year currently yielding 4.66%, the 30-year 5.18%. Gold down 1.2%, $45.99 the ounce. West Texas Intermediate crude up 0.1%. Little change there, $82.44 a barrel. Brent, the global benchmark, is trading lower, down now by 0.4%, $88.25 a barrel on Brent. As we have been reporting, Meta Platforms has agreed to pay almost $18 billion to settle a landmark social media case with multiple states. Shares of Meta Platforms up now by 1.5%. Meta, of course, the parent of both Instagram and also of Facebook. Also, we now have a price tag for RevMed's pancreatic cancer drug. It is $39,800 a month. Earlier today, Revolution Medicines secured U.S. regulatory approval for its drug, which targets one of the key molecular causes of the disease. RevMed shares, ticker RVMD, pushing higher now by 2%. Recapping S&P, let's call that flat on the day. Nvidia, ahead of its highly anticipated report, trading higher. Right now, actually lower. We got Nvidia down by 1.2%. Tim and Lisa, that is a Bloomberg Business Flash.
All right, Charlie, thank you for that update. We do appreciate it. This story crossing the Bloomberg a little earlier, just before noon today. It's a Bloomberg exclusive. It's about how Russia is preparing to escalate attacks on Ukraine after concluding that negotiations for a peace deal have reached a dead end. This, according to 3 people close to the Kremlin. Separately, Iran's military said it reached a revenue sharing agreement with Oman on the Strait of Hormuz as Tehran and Washington standoff over control of this waterway just continues. There is a lot to get to, a lot happening around the world. And we're going to get to it with Jenny Welch. She's Bloomberg Economics Chief Geoeconomics Analyst. She joins us from our Washington, D.C. bureau. I want to start with Russia, and then we'll get to the Middle East, Jenny. There's a lot of ground for us to cover with you. Here we are, the first week of this war. We thought this thing would be over, in days. Here we are, many years later at this point. Are we back to the beginning now?
I wouldn't say we're back to the beginning in many ways because the strategic landscape has shifted. Ukraine, for example, has been able to leverage drones to create an essential no man's land along the front line with Russia. And that's part of the reason, as the Bloomberg reporting is reflecting, that Moscow is considering these other strategies of striking at, for example, more of Ukraine's key cities and economic centers because they simply aren't able to make gains along the battlefield front as they were in the earlier stages of the war.
Now, Jenny, I'm curious. What does it say about the U.S.'s efforts to end the war? What does this all say about it?
What it suggests is that about a year after Trump and Putin sat down in Anchorage last year, not much progress has been made. And part of that is because it was always going to be a long shot. Ukraine and Russia are very far apart on what the terms of a peace would look like. And part of it is because the U.S. simply hasn't been focused on it. The U.S. attention has been elsewhere, namely in the Middle East. And there's just been a lot less energy, attention, and resources dedicated to resolving this conflict.
How would you characterize the appetite of everyday Ukrainians and everyday Russians to continue this conflict?
I think Ukrainians are increasingly feeling the pain of this war, which is just taking away from normal economic and social life. Many people have had to flee the country. The population is actually down compared to where it was 10 or even 20 years ago because so many people have left the country. And importantly, many of Ukraine's frontline soldiers are increasingly worn out. The manpower shortages there have led to extended deployments, and Ukraine has been wary of calling up more people and taking more from the civilian population. I think in Russia, the economic pain is somewhat more diluted because they are not the invaded country. At the same time, they are also facing manpower challenges. There is reporting and speculation that Russia may also be considering another call-up after the parliamentary elections scheduled for later this fall. And Ukrainian strikes have been seeking to bring more of the pain to Russia itself. But even those are relatively more targeted than the experience in Ukraine as the invaded party.
Jenny, I want to switch now over to Iran, Oman. Oman, they discussed these interim framework. It's kind of to reassure that shipping through the Strait of Hormuz. What exactly is this interim framework? What does it entail? Does it say anything about fees or anything?
So there are a lot of details still outstanding, including how much progress the two parties have even made on this. Earlier today, the IRGC announced that they had a deal. There's been other reporting from other Iranian sources suggesting that they're not quite at that point yet. But I think at the end of the day, the United States has a vote here too. And as long as the U.S. blockade remains in place, and as long as the U.S. continues to fight with Iran, shipping is not going to go back to normal in the Strait of Hormuz.
Also, isn't this a non-starter for the U.S. right now, the idea that it could actually be told by a country that's not the United States? Hasn't the president been very clear?
I would say the president has put out different statements on the issue, including at one point in time indicating that the United States might charge tolls or fees in the Strait. But most of the time, the U.S. position has been that they don't want to see tolls or fees in the Strait, which is the terminology that Iran has been using to indicate that it would still be gathering some revenue. It just wouldn't be in the form of a toll, which is somewhat illegal under international law, whereas a fee could theoretically be charged for services that are administered as part of the Strait. And it does seem increasingly likely that what Oman and Iran are discussing is something like a fee structure. Oman has stated that it's opposed to a toll, but admitted privately that fees are part of the discussion. And that is a very firm red line for Tehran.
Jenny, I want to switch over to Scott Bessent, Treasury Secretary Scott Bessent. He announced this economic asphyxiation campaign against Iran. Where do we stand? Have there any countries responded? Have we heard from China at all? I know there's a big meeting coming up next month.
So China's initial remarks on the issue suggest that the U.S. is going to have a hard time convincing some of Iran's most important economic partners to play ball. Beijing was very clear that it is not going to be responding to U.S. sanctions pressure or threats. And this is consistent with how China has responded to increasing U.S. economic pressure on Iran, especially over the last year, and especially as it regards to sanctioning of Chinese entities. In terms of the private conversations that Secretary Bessent said are ongoing, including involving President Trump, it remains to be seen. The administration may take aim at other partners that don't, for example, control a significant amount of critical minerals that come to the United States. For example, European countries, India, that have other linkages that are far less essential to Tehran, but could still be targeted in terms of remaining economic ties.
Jenny, does this or could this additional economic pressure, not just on Iran, but on Iranian allies or countries that do business with Iran, could this cause Iran to do what the U.S. has wanted it to do, which is to, well, one is Strait of Hormuz. That's a completely different topic. But two, make headway on getting nuclear material out of the country so the president, and so the country does not develop a nuclear weapon.
I think given that Iran has survived about 47 years of heavy U.S. sanctions, and based on the measures that were concretely announced on Monday, not, the additional diplomatic work, and remains to be seen what outcomes those efforts produce, but just based on the designations and rules that were announced on Monday, that's going to dial up the pressure on Iran, but it's not going to bring the administration or the regime there to its knees. Tehran sees this conflict as existential, and it thinks that it can outweigh the United States. These measures are going to increase the pain, especially on its broader populace, but they're not going to change the picture for the regime when it comes to this conflict.
Jennifer Welch, Bloomberg Economics Chief Geoeconomics Analyst down there in Washington, D.C. Jenny, thank you, as always, for not just your research, but for joining us on Bloomberg Businessweek Daily. The world, including Wall Street, watching what's happening in the Middle East and in Ukraine and Russia. Wall Street, though, also focused on Nvidia today and its latest quarterly results, which we expect to hit just after the closing bell. For that, we bring in Kim Forrest. She's founder and CIO over at Boca Capital Partners. The firm manages around $35 million. Kim joins us from Pittsburgh. Kim, we wanted to talk to you, given the background, your own background, and of course your interest in technology stocks today. I'm just curious about your view as Nvidia continuing to be a bellwether of AI and CapEx spend. What are you hoping to hear from the company today?
Well, I'm hoping to hear that, their customers are lining up and they can just barely fill the demand. That's what I want. Or maybe there's so much demand they can't fill it. I think that's what everybody's listening for. But there's other things that we're also watching out for, and that would be the vendor financing. That's a very scary topic, especially in tech, given what happened, I don't know, 25 years ago, maybe. So yes, we're going to look for lots of information on, is the AI spend still ongoing? Is Nvidia the preferred vendor? And then what about that vendor financing?
I'm glad you brought up vendor financing and in the history of this, going back to the .com bubble and the burst of that. But it doesn't seem like there are that many people right now concerned about vendor financing.
No, and maybe it's too early in this whole thing to ever be concerned. Events in history don't line up 100%, or why would we be here talking about them, right? So it's a very different time. There are uses for AI where we were kind of figuring out, are people really going to use the internet for buying stuff? And, everything that we kind of use it for now. That was a question. And really, the Lucent stuff wasn't even internet. That's what I'm talking about. It was really telecommunications. And that was a whole different flavor. Nothing to do with .com, but still equally bad. I think it's super early in AI. I just do. I don't think Anthropic and OpenAI are going to ultimately be the winners long term. I know that's kind of crazy to say right now. But I believe they're part of the picture, not the entire picture. And this is going to be a whole ecosystem, not just one or two companies, winner take all.
Kim, talk about the competition in the space. I know you've talked a lot about the demand for the company's products. What do you think? I mean, we've heard of OpenAI's jalapeno chips, right? There's Meta, Microsoft, Amazon. I mean, so much kind of getting into this sector. Where do you see the competition?
I see the competition is everywhere. And, I've talked about this for a long time, especially with Nvidia, that they had that huge target on their back, and that's brought to you by gross margins that are out of this world, right? It's what's going to happen. This is the great thing about capitalism. People are going to swoop in and have a better mousetrap or a better chip in this case, or maybe a series of chips. And while I don't know that Meta and Microsoft and everybody that's making it for their particular platform is a winner, it surely does chip away at NVIDIA's leadership in the long run, because maybe the best answer is a very proprietary chip for very proprietary compute. We don't know yet.
Kim, I want you to make a prediction here for us, and it's about CapEx spend and the growth in CapEx spend. When are we going to see the first company pull back?
When are we going to see? Well, we kind of saw Meta blink, right?
You think so?
So we kind of have, but I think, let's say in the next 3 years, somebody's going to blink, one of these big providers. My guess is it's Meta.
That's a lot. That's a long time and a lot of money.
Yeah, it is, isn't it? But these companies make a whole lot of money, and they think each of them are differently but well positioned to be able to grab a piece of this, new landscape. My problem with Meta is this: even though they're smart people that do things with computers, I don't know that they have a natural business model that they can, recover all this money that they're spending. That's a huge problem. Because I worked in AI and, I'm no longer in it. It was one of the reasons why I left software development, was because the companies I worked at weren't successful. You must always pay attention to the business proposition. And there isn't a clear one for Meta. So that's all I have to say about that.
So, Kim, if Nvidia beats earnings, right? Let's say that happens and the stock still falls. What does that tell you about where we are in this whole AI investment cycle?
I think it's kind of normal, because in the recent past, well, I guess it's not distant, but like a couple of years ago, when Nvidia and this whole thing was rolling out, Nvidia would, double the numbers that people were expecting. We don't have that. We haven't had that in a while, and it would be really unusual for that to happen. It's just not going to happen. But what I think people do is they say to themselves, is the news I hear from the company enough to keep me invested? And, there's a little disappointment. Some people are going to bail out, and maybe that's what happens on the sell-off the next day from NVIDIA's earnings. I don't necessarily think any of its earnings recently have been in the bucket of disappointing, right?
Why does it feel like, in just 30 seconds, why does it feel like this one is not as big of a deal as these have been in the past?
We already know. Sorry. We know a lot. Everybody talks about this constantly. So the new information the company is going to give is interesting, but may I say it's almost irrelevant.
That's a good place to end. Kim, we always love it when you join us on Bloomberg Businessweek Daily. Kim Forrest, founder and CIO over at Boca Capital Partners. Kim joining us from Pittsburgh. We should note that our wall-to-wall coverage of NVIDIA begins at a little before 4 o'clock today, a little before things close out the day. I want to encourage everybody to join the conversation, to ask us questions and ask our guests questions. We have a fantastic roundtable that includes Ed Ludlow of Bloomberg Tech. Send our questions to bloomberg.com/askradio. This is a feature available exclusively to subscribers of Bloomberg.com and of the Bloomberg Terminal. Bloomberg.com/askradio. All your questions for our panel about NVIDIA. Coming up next, we stay on tech and talk Meta. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index right now swinging between gains and losses. Little change, though. That is the key takeaway. Down now by just about half a point. All of this ahead of Nvidia earnings after the bell. Dow Industrials down 111 right now, down 0.2%. S&P effectively unchanged on the day, while Nasdaq is down 33, drop there of 0.1%. And the Nasdaq 100 index has been swinging between gains and losses. Right now it is higher by under 0.1%. The SOX, the Philadelphia Semiconductor Stock Index, it is down, up right now by under 0.1%, effectively unchanged on the day. The VIX right around 15, the 2-year 4.22%. This is Investors Digest, the Federal Reserve's preferred inflation gauge. The 10-year 4.66%, the 30-year 5.18%. All of this ahead of Kevin Warsh's speech on Friday at Jackson Hole. Gold down 1.3%, $45.94 the ounce. West Texas Intermediate crude now lower. Crude been bouncing around today. Right now, just above $82, down 0.3%. Barrel of Brent below 88 now, down by 0.9%. Everybody's eagerly awaiting Nvidia's earnings after the close of trading. Nvidia shares ahead of earnings down 1.1%, but also reporting after the bell. We'll hear from CrowdStrike. It is up 2.4%. Salesforce down by 0.3%. Recapping, S&P 500 index down now by 1 point, little changed on the day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Tim and Lisa, that is a Bloomberg Business Flash.
Thank you for that update, Charlie. Watching shares of Meta up right now by about 1.5%. They bounced around quite a bit today. They were up as much as 4%, down as much as 1.4%. This after the company said it agreed to pay up to $18 billion in landmark settlements to resolve allegations from multiple U.S. states that the company deliberately designed Facebook and Instagram to encourage compulsive use among young users. For more, we're joined by Alexandra Levine, a Bloomberg News social media and technology reporter. Also with us, Stacey Steinberg. She's a professor and director of the program on children and families at the University of Florida, Levin College of Law. Alex is here on set with us in New York. Stacey is with us from Gainesville, Florida. Alex, I want to start with you. I mentioned the $18 billion and up to $18 billion in landmark settlements. What else do we know about the details of this?
Well, we always knew, or we were always expecting that there could be some big monetary piece of this. I think perhaps the most interesting piece, though, is that there are these measures that would have essentially force the company to change the way that Instagram and Facebook operate for people who are under the age of 18. So some of the most significant things we can expect to see changed if the court approves this agreement are restrictions on how much time teens can actually spend on the platforms. Meta is saying that it would be capped at 2 hours. There are also restrictions in teens being able to use the platforms in overnight hours when they should otherwise be sleeping. I believe it's from midnight to 6 a.m. There's also going to be more restrictions around teens not being able to see likes as a default setting. Some of these can be changed with parental permissions, but I think one of the most interesting pieces on top of all of this is that all of the restrictions can be ratcheted up if TikTok and YouTube agree to sort of follow suit and fall in line with what Meta is already doing.
Now, hearing all that, I want to go to Stacey because she's kind of behind all of this. I mean, hearing all those things, Stacey, does this mean that is this a workable thing? Like, will this work? Is there another solution? I know kids are savvy, and a lot of kids can navigate kind of around these things. So tell us if you think this is a positive solution, or maybe there is another solution to this.
I think this is a great step forward. I was really excited to see this news this morning. I think that it gives it shows that we can make some meaningful changes, or that the platforms can make some meaningful changes to the design. And them agreeing to do this, I think, is a great step forward for families. It also gives parents a lot more of an ability to control and oversee what their kids are doing online. So it's a great step forward. It's not everything, but this should help protect kids online and give parents a better way to monitor and help protect them as well.
Stacey, you say it's a great step forward. It's not everything. What additionally would you like to see?
Well, I think that it's important to keep in mind that this is a step forward where the Meta has entered into an agreement specifically with the attorney generals of many states. There are still many individual lawsuits that are pending across the country by parents of children who have been harmed by social media and by some of the children themselves. And there's also still a number of lawsuits pending by schools and other organizations that are feeling the impact of the mental health harms that social media can cause for kids. So I think it's important to see how those cases play out. It's also important to see how quickly these changes are rolled out and what the enforcement mechanisms are behind the changes that we end up seeing happening here.
I got to go to this 18 billion number. Alexandra, I'm going to take it over to you for this. I know I'm not going to ask you to kind of break down the numbers, but I was kind of thinking it was going to be with a T and not a B. I mean, did they kind of get out easy on this, or?
Well, I think the potential price tag on this was something that was catching a lot of attention before the trial had actually started. Meta came out to say that they were expecting penalties as high as 1.4 trillion, which is quite remarkable, knowing that Meta's market value is 1.5 trillion. And then when the AGs came back and said, no, it's actually closer to 200 billion. It was still an enormous number, given that Meta's revenue for all of last year was roughly around that. So I think that though the monetary piece is coming out quite a bit lower than we had heard even a few days ago, it will be interesting to see sort of what the long tail of this is. I was just on a call a bit earlier with the legal team at Meta, and one question that came up was, what is the business impact of this going to be, and how are you thinking about that? And I thought the answer was really interesting. Meta was saying that they believe that teens are not actually that valuable because they don't have that much to spend. Valuable in terms of how much they can drive for the company's bottom line because they don't have that much to spend. But then, of course, there is the question of the long tail of this. And do these restrictions mean that more people will hold off on using platforms like Instagram until, say, just throwing this out there, say they're in their 20s, and sort of what that delayed usage could potentially look like for Meta in the future?
Well, Stacey, I want to ask you as a parent, as I'm a parent, I should say. I know Lisa is as well, but just as a parent of young kids, Lisa's kids are a little older than mine. Mine don't have smartphones yet. Given what we know now and the research that you do, what is the right approach for us to take in terms of exposing our kids to this technology?
That's a really big question, and it's hard for me as an attorney to be able to answer that. I think that taking a measured approach is going to be really important, and I think that it's important that we recognize how these interplays, how kids interplay with the social media platforms, how parents do, and really the unequal balance of information that the platforms have compared to what we have as parents. So from my perspective, and I'm also a parent, I think having us have more information, being able to give parents more control of how their kids interact online, and the platform sharing this information is going to be critical.
What about our own behavior, though?
Oh, well, that's huge for me. I spend a lot of time thinking about how parents interact on social media and how our own choices online impact our kids. I don't think this specific settlement will play a big role in it, but I think it's always important that parents keep in mind that how we use social media really shows our kids what we value. And so if we can manage our own social media use, not use it as much in front of them, and take time to show our kids how their privacy is impacted when we share, and how social media companies can use our information in ways that harm us, I think that we're helping our kids for sure.
Well, Lisa, I agree. It doesn't show, this doesn't do anything to the way that adults interact with social media, but I think what it does is it shows that the way that this is part of the conversation now, and the way that we're thinking about this differently than we were, let's say, a decade ago. I don't know. I mean, your kids are older. The toothpaste is out of the tube with them. They have smartphones.
Correct. But I think the hardest thing is for parents just to monitor it. And I think some of these will help in that way. But that is just the hardest thing. I mean, you see other countries like Australia and those who put out outright bans. So maybe you can talk to that, Alexandra, about how come it's so difficult here in the U.S. to try and make some crackdowns as serious as that?
Well, Australia's crackdown was certainly serious, but it hasn't been foolproof. It was definitely a big step forward, and it was a big deal that Australia went first, because now, of course, there's a growing number of countries that are considering, implementing similar types of restrictions. But I think actually thinking about Australia is a really good litmus test here. I think it was Stacey had mentioned a few minutes ago, what are the enforcement mechanisms here? everything that has been laid out so far as these changes that may be made if the court approves this, the changes all look really good on paper. But there's always a question, especially because so much of this relies on the platforms knowing how old the children who are using the platforms are. There's a lot of questions about how any of this is enforceable, right? So a lot of these restrictions depend on the platforms knowing with certainty that a person is actually under the age of 18. But if, as we saw in Australia and we've seen in the US for so many years, it's very easy for teens to sign up with fake birthdays. Age verification is a problem across the entire industry, not just for Meta. And a lot of these workarounds are sort of obvious for a tech-savvy, digitally native, generation that has come of age with their phones. The question is, what are the enforcement mechanisms and how successful are they actually going to be? So I think Australia is an important barometer in that larger discussion.
Bringing it back to the U.S., at least here in the U.S., Alex, is the ball in TikTok's court now?
Well, interestingly, Meta has been calling on TikTok and YouTube to implement these same things, and Meta is holding back a certain amount of payments, and they're also sort of tempering the kinds of restrictions that they're going to put on users until TikTok and YouTube agree to sort of meet them in the direction where they're headed. Interestingly, Snap has been a defendant in this larger national social media litigation moment. The AGs have called on Snap to sort of follow suit as well. But I think that the companies, Snap, TikTok, and YouTube, that have settled in some of the other litigation, maybe thought that they were out of the hot seat, maybe thought that they would not be in the spotlight quite as much. But now that this is the agreement that Meta has reached with AGs, I think if anything, it leaves Meta, coming out of this looking in some ways you could say like a hero here, where now the other companies are thrust back into the hot seat and ball is sort of in their court to, for everybody to see where they net out on some of these demands that both the AGs and Meta are making of them.
All right, I want to take a look forward. Stacey, I want to go back to you. We have probably about 2 minutes left or so. Where do we go from here? I mean, I know a judge still has to sign off on the agreement, correct? But where do we go from this step? Because you mentioned this is the perfect, stepping off point. Where does it go from here?
Well, I think once the judge signs off on it, hopefully the judge will sign off on it soon. The next step is to see, do the other platforms follow suit? And do these design changes actually get implemented? How are they audited? How are we making sure that these are happening? I think that seeing how the individual platforms other than Meta follow through is going to be really important, because this sets a floor for what's acceptable for designs and for how platforms design their products. It gives us a floor for how kids should be maybe allowed to use social media, of course, with parental oversight being number one. And it also gives us some tools that we didn't previously have to be able to make parents feel that they are more in control and actually place them in a position where they're more able to help their kids interact with their online platforms more effectively.
Alex, I'm going to send the last one to you. Just 20 seconds. Does this remove a major regulatory overhang for the company?
I think it both removes one piece of this and also extends it far into the future, because it's not just a monetary settlement. I think injunctive relief, which are measures that actually require the companies to change the DNA of how they work for young people, that was always sort of the bigger looming threat for them. And now that those are real, I think it remains to be seen, as Stacey pointed out, how quickly they get implemented, how well they work. And so I think it's a little bit of both.
Well, I wish they would ban me, because I waste too much time on these things
You're
already.
a scroller. No.
Yeah. I've gotten better, but it's not good. Alex Levine, social media and technology reporter at Bloomberg News, here on set. Stacey Steinberg, a big thank you to her as well, professor and director of program on children and families at the University of Florida Levin College of Law. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Roughly 1 hour and 40 minutes until the latest numbers out of Nvidia. Bloomberg has it dropping at 4:20 Wall Street time. Right now, we have got stocks treading water ahead of Nvidia's numbers. Nvidia shares, by the way, they are trading lower by 1.1%. S&P 500 index, we'll call that flat on the day right now. It's 76.74. A little change, perhaps, to be more accurate here. We've got the Dow Industrials down 130. 35, down 0.2%. Nasdaq Composite down 34, down 0.1%. Nasdaq 100 index has been bouncing around between gains and losses. Right now, that index higher by 13 points, up under 0.1%. 2-year 4.22%. We've got bonds falling on speculation that the Fed will raise rates this year. The 10-year 4.66% and the 30-year 5.18%. Gold down 1.3%. Spot gold now at $45.95 the ounce. West Texas Intermediate crude $82.17 a barrel on WTI, down by 0.2%. Keeping an eye on a number of retailers after earnings. Look at Abercrombie and Fitch shares today. They are surging. ANF on the ticker. It is up by 35.4%. The retailer raised its annual earnings guidance. Also out with earnings, we heard from Bath and Body Works. Shares up now by 7.1%. And Kohl's is out with earnings as well. That stock higher now by 1.5%. Kohl's turnaround attempt showing some progress again. Kohl's shares up by 1.4%, but the one that bears repeating. ANF, Abercrombie and Fitch, up now by 35%. Recapping here, S&P 500 index flat on the day. Little change, down 1 point right now. Nvidia ahead of earnings, trading down by 1.1%. Tim and Lisa, that is a Bloomberg Business Flash.
Hey, Charlie, thanks for that. Do appreciate it. Well, Wall Street certainly focused on Nvidia. Before then, though, we're getting news in another part of the semiconductor ecosystem, and that's from Lam Research, the nearly $400 billion market cap developer of machines that are used in the chip manufacturing process. The company out with news this afternoon that it's breaking ground on a more than $600 million expansion of its Tualatin campus in Oregon. It's just south of Portland, part of a more than $3 billion planned investment in its labs around the world. We've got with us the CEO of Lam Research, Tim Archer, who joins us alongside Ed Ludlow, the host of Bloomberg Tech. Ed's out there in San Francisco. Tim is out there in Tualatin, Oregon. Tim, I want to get to this project. We'll get to it. But before we do, shares of Lam Research just surged at the end of last month. This was just after you reported results, closing higher by close to 18%. You reported fourth quarter results and an outlook for adjusted earnings that beat expectations. You said in a statement at the time that record revenue, operating margin, and earnings per share at a record as AI-driven demand continues to reshape the semiconductor industry. Can you give us some color of what you've seen day to day over the past 4 weeks that show what you're seeing with demand right now?
Well, thanks very much for having me today. It's look, I think those results, just indicate we're in an accelerating demand environment for semiconductors. And what Lam does, I think most people realize, but we make the machines that help make all of those chips, and especially our strengths are in some of the most advanced manufacturing processes for chip making. So we're seeing tremendous demand with the AI build out and all of the chips required to support AI. And I think that just week by week by week, we continue to just see not only really, we don't talk a lot about capacity. In fact, the announcement we're making here today is about a new R&D lab. We're just seeing an acceleration of the pace of innovation, the capabilities of each of those chips, and it's something that we're investing to stay ahead of that demand.
Tim, it's Ed in San Francisco, and you're right. We don't really talk about at least Lam in the context of more capacity. Your challenge is to make increasingly tiny three-dimensional structures at atomic level precision. And that's only getting more difficult in the AI age. How do these lab investments help you get there?
One of the keys to really accelerating innovation is working very closely with our customers. And so one of the things that's very unique about the announcement and the groundbreaking we have here in Oregon, the Oregon has been kind of the heart of the Silicon Forest for more than 3 decades. And so a lab here in Oregon puts us close to a lot of the advanced chip making that happens very close by here by some of our very large customers. And we also have labs in Asia and Europe as well to put us close to those customers. We think that by shortening that distance and really building incredibly tight collaboration with our customers who understand what those next problems are to be solved, that accelerates the velocity of innovation with them for those next generations. So that's what's unique about our lab strategy and the type of work that's done.
So, Tim, why is the timing on this? Why is Lam investing so heavily now? What does semiconductor manufacturing technology matter?
Yeah, if you think about this lab here is part of a much bigger investment that we announced. It's $3 billion across that global lab network. And, why now? The pace of innovation. AI has fundamentally changed the rate at which we have to be innovating. I look back just a few years ago, and, when the markets were driven by things like smartphones and PCs, that cycle was operating, kind of on the every 1 to 3 years, you needed to really innovate something new. AI has changed that requirement such that with new AI models coming every few months, and each of those demanding more computational power, even better high bandwidth memory, even more storage, Lam is looking to meet those needs. We are a manufacturer of machines that make each and every one of those types of devices, and so there's a lot of demand for us to continue to come out with the next great innovation in process and manufacturing technology to keep up. We've also seen a tremendous boom in what's called advanced packaging. Yes. It used to be that in most cases you built a single chip and it had a certain function, and you increased the performance of that chip by making it smaller and introducing new materials. Advanced packaging changes the game because now it is about putting many different types of chips together to create system-level performance. And putting all of these chips together and stacking them into a three-dimensional architecture, it requires a lot of etch and deposition equipment. We said that our business in advanced packaging this year would be growing more than 70% year on year. And one of the particular tools, the copper electroplating tool that plays such an important role, that tool is actually developed and manufactured here in Oregon, which makes this such an important site for us.
Tim, it's really important to underscore Nvidia, as an example, is not your direct customer, right? It is TSMC and the memory makers. But, it is the demand for lead edge chips across logic and memory, HBM, that is the story out in the world. How much of that growth in demand directly reads through to Lam, and how do you respond to it?
Yeah, it's, if you look at advanced chips today, one of the trends that just is, it's been around for a few years, and AI has really put it into hyperdrive, is the three-dimensional scaling of every device. And so, of course, that's been true in foundry logic with technologies like gate-all-around, introduction of gate-all-around, which is a three-dimensional transistor structure. But really, it comes to bear when you think about what high-bandwidth memory is. High-bandwidth memory is the stacking of multiple DRAM chips on top of each other to create higher bandwidth performance for AI. And so clearly a three-dimensional architecture that requires a lot of etch and deposition equipment and a lot of innovation for us to be able to support the manufacture of those structures. NAND has had a 3D architecture since more than 10 years, and Lam has been a very strong player. In fact, it has traditionally been our strongest market because of that 3D architecture. And right. What we're seeing now is as other devices go 3D, it just drives a lot more demand for our specific types of equipment.
Hey, Tim, we only have 20 seconds left, but you mentioned this is part of a $3 billion effort to expand your global lab network over the next 5 years. You made that announcement just a couple of weeks ago. I'm curious where you think we are in the cycle right now and why you're so confident that demand will still be high in 5 years.
Yeah, well, the need for innovation never ends, regardless of where you are in the cycle. And so, one thing we've seen, I've been in the industry more than 30 years, lots of cycles, and so regardless, the investment in innovation, the investment in R&D labs, putting yourself close to the customer to accelerate collaboration. Clearly, we think we're in the early stages of a big build-out, but regardless, we need to invest in innovation, and that makes the company stronger throughout any cycle.
Tim, appreciate your time this afternoon. Tim Archer, CEO of Lam Research. Also, always appreciate Ed Ludlow's time. He's the host of Bloomberg Tech. He's going to be back with us quite a bit next hour and in the 4 p.m. to talk Nvidia. Coming up next on Bloomberg Businessweek Daily, we've got stocks on the move and a check of markets.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That's not Carol Masser. That's Lisa Mateo. You might see her on Saturdays and Sundays on Bloomberg this weekend. It starts at 7 a.m. Wall Street time. Thanks for staying up late for us.
Yeah, no, and it's good. It's not Saturday. You're not seeing things. Yes, I am here in full effect, ready to join in.
And I think you're with us later this week, too.
Correct.
Yeah, okay.
And rounding out the rest of the week with you guys, so you're stuck with me.
We are happy to have you. It is a Wednesday, and it's Nvidia Wednesday today. We expect Nvidia results to cross just after 4 o'clock today after the markets close, typically around 4:20 Wall Street time. We got a great roundtable joining us in the 4 o'clock hour. It includes expert insight and analysis, not just from our Bloomberg TV team, but from folks who cover this stuff outside of the organization as well. Be sure to tune in for that. If you have any questions for any of those folks joining us later, or any questions about NVIDIA, send them to us. All you got to do is go to bloomberg.com/askradio. That's bloomberg.com/askradio. There, for Bloomberg subscribers and subscribers of the Bloomberg terminal, you can ask questions to our guests and really be part of the conversation.
I hear we're starting to get some.
Yeah, we're getting some good ones already.
Okay, good.
Sometimes, I say, send all complaints to Carol Masser. Send all questions to me, okay, and compliments to me.
Is that how it works?
That's how it works. And she does get the complaints, so thank you for sending those to her and not to me. Rami Sarafa is going to be joining us, the CEO over at Cordoba. We're going to have Ed Ludlow of Bloomberg Tech as well. Kunjan Sabani, Bloomberg Intelligence Senior Semiconductor Analyst, is going to be joining us as well in the 4 o'clock hour. Before we get there, though, we got stocks on the move today. I'm Tim Stenovec, along with Lisa Mateo. Let's take a look at some stocks on the move. We are joined by Bloomberg News cross-asset reporter Denitsa Sekova. Hey, Denitsa.
Hi there. Let's talk about Meta. Meta agreed to pay up to $18 billion in landmark settlements to multiple U.S. states, saying that the company deliberately designed Facebook and Instagram to encourage compulsive use among younger users. This is just an incredible case. Through its start until now, everyone has been following it. It's very interesting that if this case was resolved and it posed such enormous risk for Meta, the company itself estimated that it's going to cost as much as $1.4 trillion. Just historic case. I don't think anything like this has happened like that before. Obviously, this is the settlement we have. As part of the deal, the company will put new guardrails. A lot of things will change, but compared to what could have happened, obviously changes are much smaller. We're seeing an interesting reaction. Initially, the stock sold off. Now it's actually up more than 1.5%. That said, we see a lot of pressure in the social media companies, Pinterest, Reddit, Snapchat. All of those companies are definitely feeling the pressure. We've seen more and more governments talk about this. A lot of European countries are talking more and more about regulating social media for younger users. So who knows if this case is just the start of a broader debate. But I think it's kind of interesting that the initial reaction faded so fast. I guess the price tag of the actual lawsuit was much higher, so investors felt some relief, but it's really surprising to me.
And how about Nvidia? Of course, we've been talking about it all day right now, waiting for those results to come in. Ahead of it, well, they're down about 1%, just about. So what other details do you have for us?
Everyone is waiting for Nvidia's earnings. Obviously, it's not about one company. It's about the AI trade. It's about the economy. It's about everything. It's about that. So indeed, the stock is down about 1%. The results we're expecting is another quarter of strong results. Analysts project the revenue to nearly double from a year ago, similar in number for income. The revenue number is the fastest pace in 2 years. But nevertheless, this can still be a big disappointment for investors, even if they reach those numbers. Investors, they're looking for capital spending. They're looking for future demand. We've been talking a lot about rising costs. People say that AI chips will rise more than 15% in some cases, surging memory costs. So I feel as though investors may be quite sensitive about those metrics, even if earnings come just as expected, even if it's another amazing year. That said, the company is up about 13%, which compared to previous years is not such a strong rally. So definitely investors are not as forgiving as in the past.
I mean, it's a $5.1 trillion company.
True.
Okay.
13%, I'll take it.
Yeah. You started with Meta. That's, just shy of $1.5 trillion. Like, just for context of other Mag 7.
Exactly. Massive company. So 13% is enough.
Pretty
but
massive.
Compared to previous years, still.
All right, what's the next one you got for us?
We have Revolution Medicines. Really great news for investors and society. Revolution Medicines won U.S. approval for a breakthrough pill that lengthens the lives of patients with advanced pancreatic cancer. I feel as though there has been a lot of advancements in that, and investors were kind of expecting it. The ticker is RTVM. The stock is getting just a small boost today, but if you look at the chart up to date, the company is valued at more than $46 billion, and it has more than doubled since April. So, obviously the reaction was going into this.
We've spoken about this drug in the past. It's going to be a list price of more than $475,000 a year. That's very expensive. Yeah. Here's what's notable to me, though. The current standard of treatment, patients lived in the trial for 6.7 months, while those who received this drug survived for more than 13 months. So it still is such a short period of time when you're diagnosed with this.
Yes, but they doubled it.
They doubled it, exactly.
No, it's a very complicated case because from what I understand, this is often diagnosed very late compared to other cancers. And also, these treatments allow people to stay at home and be with their families compared to other treatments. So still a great relief and great progress going forward.
Denise Aseko with today's Stock Movers. For more conversations like this, check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. That is going to do it for our hour on TV. If you're sticking with us on radio, we got more coverage of Meta Platforms next. This is Bloomberg.